Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. So over the last couple days, I have been talking about the market, specifically, mainly focusing on the trade war, the tariff discussions that we have been hearing about for the last few months. I mean, ever since going all the way back to roughly the end of January, where the trade war officially began, the markets have been pretty volatile, but have not been really growing astronomically at all. In fact, there hasn't been very positive gains since the end of January. It's just been chopping sideways or just major downtrends beginning. Now, I did talk about this in a previous video as well, and it was actually utilizing this post here from the coinbase letter regarding April 2nd, because what we've been hearing about is what's about to happen on April 2nd from Trump with these reciprocal tariffs. Now, it's supposed to basically be the end of uncertainty around tariffs, and we're supposed to start to see a big prosperity event essentially happening around tariffs from that day on. Now, the market mainly thinks that this is going to be the opposite, which is why we have been witnessing a lot of red, days and a ton of volatility as well around tech stocks. In fact, tech stocks alone are down over $400 billion. And that was obviously back on the 26th. Now it's a little bit more in terms of the negative downtrend. But the thing that we are focused on is what happens on the 2nd. Now, to really kind of add on to this post here from the coinbase letter, we did get a new update on the 27th, which was Mexico's president says that we are going to give an integral response to tariffs after April 2nd. Reciprocal tariffs on the reciprocal tariffs are coming. And yeah, this is a non-stop trade war at this point. Whatever happens on the 2nd, expect a little bit of blowback. But a lot of people are starting to predict that this could actually be a very bullish day, aka April 2nd could be the start of the next big rally. Now, one individual that does believe that that is the case is Tom Lee. Now, we're going to get to that individual here in a second. If you don't know who Tom Lee is, obviously, a lot of you probably do know, but I'm going to give a quick rundown. But if we go over here as well, we did get an update from Trump regarding April 2nd back on the 24th. And this is what we heard. So Trump on tariffs, I may give a lot of countries breaks, but it's reciprocal, but we might be even nicer than that. You know, we've been very nice to a lot of countries for a long time, but I call it Liberation Day. April 2nd is Liberation Day. Check it out.
Yeah, please.
The size of the investment, partly because of tariffs. On April 2nd, the reciprocal tariffs will go into effect. Is it truly reciprocal? Are there some countries that might get a break or some sectors that might get a break?
Well, I may give a lot of countries breaks, but it's reciprocal, but we might be even nicer than that. You know, we've been very nice to a lot of countries for a long time, but I call it Liberation Day. April 2nd is Liberation Day. But today, as you know, we did something with respect to Venezuela. You heard about that, and that will be quite important. We'll be announcing some additional tariffs over the next few days, having to do with automobiles, cars, and having also to do a little bit with lumber down the road, lumber and chips. We're going to get all those chip companies coming back. They're already coming back without even doing it. So it's been very good. But we'll be announcing some others. But for the most part, April 2nd will be a big day. That'll be Reciprocal Day. And we'll be bringing some of the money back that's been taken from us. Let's be nice by using the word taken. I don't want to use a stronger word because these guys are professional politicians and they don't like to hear those words. I refuse to use the word stolen from us, but that's a...
Countries mutually bring down tariffs? Are you seeing that negotiation?
Oh, it happened. Well, the European Union lowered their tariffs to 2.5%. We were only at 2.5% for cars, which is very low. And as you probably heard, that European Union lowered their number from much higher than that, many, many times our surprise to 2.5%. So that was good. But I don't know that I expect that. It's up to them. But we have reciprocal tariffs.
Though obviously the big focus was on April 2nd. Now, on the 24th, the markets did ignite a bit, and that was because of the initial view here, which was the fact that we're going to give a lot of countries breaks, we'll probably make a lot of deals, and things are going to start to cool down. And then, of course, we did hear the announcement of the auto tariffs, which started to scare the markets a little bit more. Now, if we think about all of this, okay, what we've been hearing over the last couple of days is that we could start to see the markets rally because of April 2nd. Now, this is a mix, right? Like there's 50-50 here. For an example, even over here, we have 51% of investors feel another big market crash is on the horizon. However, this post here from the 27th from CNBC says options market is pricing in a disruptive but not catastrophic response to April 2nd. It feels as though we're just heading into a very volatile week. Now, this is the update that we got from Tom Lee. Now, just like I've said, Tom Lee has been very good so far from around like 2023, 2024, even into the beginning of 2025. But now, is he being a little bit too bullish? Are we about to see the bearish part of this market heat up in a big way? And is April 2nd going to be the day where the biggest negative moves around these markets begin? Or are we going to follow what Tom Lee is saying here, where he's saying that the odds of a V-shaped recovery in stocks after April 2nd is extremely high? Check out this video clip.
Market sliding in the final hour of today. BlackRock's Rick Rieder saying last hour that the animal spirits that helped drive the market higher at the end of 2024 are part of what's hurting stocks now. Take a listen.
We came in the beginning of this year. It was all about animal spirits, and it seems like it's moved to animals in hibernation from animal spirits, and that can translate into a bit slower growth for a couple of quarters.
So that was interesting to me, Tom Lee, as I bring you into this conversation, the head of research at Fundstrat and a CNBC contributor, because he's talking about animals in hibernation, not animals dying. It goes back to this idea of uncertainty around things like trade and tariff policy, and the fact that as of right now, in the midst of that uncertainty, perhaps companies are sitting on their hands before they start to make any kind of future investments. So if that's the situation, how much does getting some sort of certainty now frame the investment thesis for how you position yourself moving forward?
I think that's exactly what's happening now, Morgan. First, in 2018, which Michael was talking about, the spike in the VIX or the collapse in investor sentiment or consumer confidence, that all happened around February 2018. So really that coincided with that first low that was made in 2018, and the market began to stage its recovery. I don't blame any business or investor for saying, look, there's so much uncertainty, I can't make a decision. I think that's why Rick Rieder's talking about animals in hibernation. But as we start to think about the second half of this year, first of all, we've already had the collapse in sentiment. We've seen $850 billion of cash raised over the past year on money market balances. And then in the second half, we're looking for possibly tax reform, which really propelled stocks in 2017. So I think that the odds of a V-shaped recovery in stocks that come after April 2 is just extremely high, because we've already sequenced a lot of the panic that people saw in 2018. I think it's already taken place.
So what would you be buying right now?
Well, to us, I think Exhibit A for a V-shaped recovery is going to be Tesla, because it's really been one of the most controversial stocks, and it's been caught in that sort of political maelstrom of Doge and Elon Musk's involvement in the White House. And I think it's already recovered more than 15%. But I think if Tesla is leading us into this bounce, that's a bull case for Mag 7 to be the group to own in the next few months.
So you like Mag 7, even though we've been talking about things like cash burn at Microsoft and all of the CapEx investments and worries about a bubble in AI spending?
Yeah, I mean, in some ways, it's been a self-amplifying downturn, right? Because we've been worried about AI as a bubble, and the CoreWeave IPO at a time when we have tariff uncertainty. So I could see it as a very convenient reason why investors have actually avoided Mag 7, and it's been the group that kind of really led the downturn. But it is a cyclical trade too, because I think once investor confidence returns and they're going to start to buy stocks, the Mag 7 are not only the best companies, but they're the most liquid, and they've really derated. On top of that, I think financials and industrials look attractive as well.
What do you think it takes to see that reversal in sentiment? And we talk so much about when sentiment gets negative enough, it becomes a contrarian buy signal. So if we're there now, then what are going to be the catalysts to start to shift that confidence again?
Well, I think the focus right now is on April 2. So I think the market has a lot of myopia around getting tariffs and tariff clarity. But we know that tariffs are just one part of the administration's goal. There is reducing regulatory cost, and then there is extending tax cuts. I think as investors start to think about that for the rest of the year, that gets them quite excited. And of course, I think we have a lot of what I would call spooled energy. Investors can't stay this bearish. The VIX can't stay this anxious. There is a lot of firepower and dry powder on the sidelines, and I think businesses can't stay cautious forever. I mean, once they know the ground rules, I think they're going to actually start making decisions.
Now, I do completely agree with Tom Lee here, simply because of the facts that we have in front of us. Number one, money market funds. There's over $6 trillion on the sidelines waiting for something, right? And on top of that, sell pressure will eventually, start to diminish. I've said this around everything. Even like when we look at XRP, we look at, Bitcoin, we look at everything around the crypto market, sell pressure will eventually start to diminish greatly. But on top of that, the sentiment, right? Like we look at the sentiment, and even over here, like 51%, that's the majority now. The majority of investors feel as if there is going to be another big crash hitting the market. Now, wouldn't April 2nd, which is this huge day that's now getting pushed, wouldn't that technically be the day that we would either see one, that big crash, or two, the reversal? Now, the only thing that gets me a little bit concerned about April 2nd that could go against all of the, bullish idea around this is Jim Cramer. Because he said that he's backing Trump's April 2nd tariffs. I hate free trade. I am pro-tariff. Absolutely. I think it's been an embarrassment for our country. This is what Jim Cramer said.
Left UAW.
Oh, yeah. UAW's come out with statements of support. Yeah. Of course, they're arguing for high-paying jobs,
right,
which is going to make the end product a little more expensive, is it not?
Exactly. Yes, it will. But you know how I feel about tariffs, David. I'm classically pro-union.
I don't know what that means.
No, I'm saying this is a very pro-union strategy.
Right. So you are pro-tariffs, or you're not?
I am pro-tariff, absolutely.
You are pro-tariff.
I hate free trade. I think it's been an embarrassment for our country. It's cost us fortunes. Everybody picks on us. There's just no end to it. And now that my views don't really matter.
Can we write that down though? I hate free trade.
I hate free trade.
Really, you hate it?
New there. I've hated free trade forever.
You have?
Yo, God,
I mean, you've been a beneficiary though of globalization and asset flows around the world.
On air, I have said, look, I am a big winner from
Anybody in the service business has certainly been a beneficiary to a certain extent of free trade.
You want to own the service companies because they're not going to be tariffed.
Which is our economy, basically.
I've been saying, I know that you don't get that much chance to watch Mad Money, but I come out against free trade every single night. I think it's just an abomination, and these countries we've been a dumping ground for these countries, and it's time. But again, that's my editorial at the end of Mad Money.
Well, you sound a lot like the president, because he would say, in fact, uses the same language.
Maybe he sounds a lot like me.
You're also pro-consumer, and you have long argued for people who maybe don't have as much to be able to afford things. There's an item last night that foreign-made assembled cars are going to be essentially a luxury item in this country.
They are. I know, and this is the problem: is that we favor cheap stuff in this country, but at a certain point we also wrecked our small towns.
Yes, we did,
and that's what I'm focused on: the destruction of the Small.
I do find, again, we are entering a new era in terms of what we're trying to accomplish here. It's pretty complex in some ways.
It's really complex.
The outcome is uncertain. And I do find, watching Phil LaBelle yesterday do his great reporting from that Hyundai plant, I was struck by the robots, of course, so many others.
So, of course, they just go, to talk about what could happen with these tariffs if they do, start to be very bullish, and what could they do for the small towns, things like that. But at the end of the day, right, like Jim Cramer is bullish on tariffs, and he's bullish on April 2nd tariffs specifically here, which could this be that inverse moment where, all right, if he's bullish on April 2nd tariffs, wouldn't this result in a bearish effect on the markets? Technically, if this is going to play into the inverse Cramer effect, then that would be the case. But we are still working with a market where the sentiment has been absolutely bearish for the last few months. Sell pressure is starting to diminish. We still have trillions of dollars on the sidelines. And this would technically be the best this would be the best environment for that big reversal. April 2nd, a date that's getting pushed everywhere, headline articles around it. This would make sense for that big reversal to actually start, which is why I'm sitting here and I'm agreeing with Tom Lee on this. I do think that April 2nd could be an extremely high possibility of being the day where we begin the big recovery across the board. We have to watch, wait, and see exactly what happens. The best way to play this, have stablecoins on the sidelines. Do not play with leverage and just ride the storm. Because outside of that, there's not much more that we can really kind of do because a lot of these effects are out of our hands. There's probably going to be a lot of liquidation events. There's probably going to be, a lot of volatility as well leading into April 2nd and even after April 2nd. So just be prepared for that. And with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, set notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.